Old Shaka Zulu song, we are growing higher, but not quite higher and higher.
Yeah, and in South Africa, we're not growing enough, not at all. So there was relief, firstly, for indebted consumers today. No cut in interest rates, but at least those rates remain unchanged for now, prime at 10%, so no increase if you're in debt. The bad news, which Bongani has alluded to, coming from the Reserve Bank that announced that decision today, is that the economy, once again, will hardly grow this year. So let's bring up the number of the day to remember. 1.2%, which is the new forecast for growth this year. That is a full 0.5% lower than the previous forecast of the Reserve Bank itself of 1.7%. Now you'll remember the economy contracted in the first quarter of this year, and despite the initial euphoria around the political changes in South Africa, around the changes at SOEs, a lot of recent economic data has been pretty poor. Some are even saying there could be a recession, which is 2 quarters of contraction. Either way, the Reserve Bank thinks that we will only eke out growth of 1.2% this year, and this is just not good enough. The population in this country is growing at a faster rate. That means on average, as we have seen for several years, South Africans are going to get poorer once more this year. All right, let's focus on those interest rates now. The possibility of higher inflation is one of the reasons why the Reserve Bank is not cutting those rates to give more relief. Cutting rates, of course, puts more money in people's pockets because they can borrow more easily, buy more goods, and that can sometimes push up prices. And you'll see that interest rates were very low until 2014. That was a result of the crash that came a few years earlier. They started rising slowly but surely, and then we plateaued, and finally the tide turned and rates started coming down. That was towards the end of last year. Indebted consumers were hoping for more cuts. We've had just 2 small ones since then. But if the global trade war continues to weaken the rand, that could lead to inflation in future. That could even lead to another possible turn in the cycle back towards interest rate hikes. Beside interest rates, the Reserve Bank addressed those global risks to South Africa, like the trade war between the United States and other parts of the world. Lesetja Kganyago has warned that South Africa can feel the pain if the protectionism, marked, of course, by the increase in tariffs on goods going into the United States, can hurt small and open economies like South Africa.
The impact of the trade wars, they are quite telling on the global economy. And for us to understand this, let's take a step back and remember that in 2008, at the advent of the global financial crisis, global trade collapsed, and the focus of the global community was to then restart global trade flows. And in that process, we had, as a global community, have to look at what were the constraints to trade growth. And amongst those at the time that were identified had to do with the decline in trade finance as a result of the collapse of the international financial system in financial systems in many of the developed countries. What made the 1929 economic crisis really a depression was the surge in protectionism, which depressed global trade. And what you are going to be having now, if this trade wars materialize and there is a rise of protectionism, small open economies will feel the pain immediately. Because for many small open economies, we are hooked into global value chains. And when there is protectionism in the major markets, that means that small open economies that depends on exports can no longer sell there. I think that, yes, we will be the immediate losers as small open economies, but overall, as a global community, we will all be losers from the trade wars. No one can gain from these things because it's going to, you see, once you start a war, you are not going to be the one to stop it because everyone will then try to hit back.